but with it, this is great. We're live. We're live with Real Fridays here on Real Fridays. Every Friday is Real Fridays at 12:30, and I'm Rick Rock, an executive, a mortgage banker, and one who. Oh, no way! Is Jeremy? Jeremy's already. This is really early for Jeremy. So Kobe is a very
4 minutes early.
Kobe is a very, very special guest. If the fact that Jeremy is not at least 5 minutes late. So I'm obviously Rick Rock. I represent the mortgage banking side of the industry, both mortgage, housing, and real estate. Jeremy is I think, and he hates it when I say this, but I don't really care. I think he's one of the best real, lawyers in the country and sort of technology and, sort of innovative minds when it comes to rethinking how mortgage should be done, which is Jeremy Potter. And then you have Brock Cassidy, who's Chief Revenue Officer at NewZip, and just a great guy, good, smart, Bodwin guy. He's the right-hand man of the New York City mayor, the newly elect, former graduate, Bodwin. So
I think I might have been in a room with him once, but not on the cabinet yet.
I just want to see how we're going to make mortgages great again in New York City through the newly elected mayor, but. Who I think, by the way, is brilliant. I mean, every time I was just listening to a speech he gave this morning, actually, and I'm blown away with just how eloquent and just how really smart. I mean, just hopefully his policies can somewhere the rubber will hit the road. And I was happy to see Jamie Dimon actually just say, look, I'm not leaving New York. I'm gonna work with the administration to help them implement as much of what makes sense and what's healthy for New York. So I actually liked it. I was kind of happy to see that kind of posture from Jamie Dimon in that regard. But and so we have Kobe. Kobe, welcome to the show, my friend. This is good stuff.
Yeah, thank you so much. And I don't know if you knew this about me, but New York City is my hometown.
Dude, I thought you lived in New York City, or excuse me, in Northern California.
I do, but I grew up. I was born and raised in Brooklyn, New York, and I lived there the first 20 some odd years of my life.
Right, but you left like everybody else is doing, so you can't claim it now.
Well,
you're a Californian. You're in Northern California, living in some beautiful home in the Bay Area somewhere.
I am in Northern California now, but I do keep close tabs on what goes on in New York City. My family is still there, and it'll always be where I'm from, right? Always part of my identity.
Exactly. Don't let him talk about it that way. That's a really cool piece. I didn't know that either. And Kobe, I
didn't know that.
Really cool. Yeah.
That's Brooklyn's great. I love Brooklyn. And so tell us, let's do headlines, because the first thing we do, apologies that I'm in my car. God bless it. God bless all the TSA people, man. I'm telling you, I just flew in actually from Denver by way of Charlotte. And I was at the Total Expert Conference, which was outstanding, and Kobe and I we spent quite a bit of time there. But the TSA, man, I'm telling you, you could just commenting to them that, hey, I appreciate you guys doing what you do, showing up, and hopefully you'll be made whole here soon. I mean, it was emotional. The looks that you got, looks of appreciation, but it was emotional seeing them. So I'm just my flight was delayed, and I'm late from getting back to my office for this year. So that's why I'm in the car. I'm seeing this on Route 91.
How many travelers did you delay while you were comforting the TSA people, though?
Yeah, that's a good question.
It's like, why is the longest line at Rick's X-ray machine?
What's with the hugs up there? Can we get this going?
That's funny.
It was efficiency. It was efficiency at its best. But let's do headlines and what has caught our attention this week, and what's been. I know this is probably the least interesting part of what Jeremy likes to talk about as far as just the mundane headlines. But what would you say to me? Headlines that
it beats talking about it.
Exactly.
I don't know, Kobe. What was the thing that you heard that was either the most surprising or this sort of got you thinking in a different direction from your travels this week?
Yeah, I mean, I don't want to dive too deep into the conference that both Rick and I were at, but I'll just we could just touch on that for a moment. One of the things that came out of that conference around AI implementation and around where the industry is heading with AI is this importance to not forget that there's humans in the loop with all this, right? That the human connection between the loan officer and the buyer, the loan officer and the agent, the loan officer and their internal leadership team, like all of these connections are super important for any kind of tech adoption to really work, for any kind of change management to take positive effect. You know, and the evidence of that was the fact that we had a few hundred people at this conference connecting and talking and sharing ideas. And Sue Woodard said it best, like that's never going to be replaced by AI. And I think, you know, even just, you know, Rick and I hanging out and chatting, you know, like that, those are all things when you've got mortgage people in the room together, sharing ideas and sharing their frustrations, sharing their worries, right? I mean, all of those things are important to kind of move the industry forward and for us to really grow, right? It's just so hard to do that. Like all of us spend so much time on Zoom meetings and just virtual connections that, like, to give somebody a hug, a handshake, a high five, to play pool with somebody in the bar, whether you're, you know, winning or losing like Rick did 19 times in a row to Greg Scher, you know, all of those things are important in building friendships, right?
Yeah.
And so
AI will not replace intoxicated speech. You know, AI will not replace intoxicated speech late night at these conferences. So that is a true statement, Kobe.
Yeah.
But isn't that where Kobe, isn't that where it gets all confusing? Which is like when we first started imagining what AI was capable of, we imagined delegating it the shit that we didn't want to do to free ourselves up to do exactly the things that you're describing. And then somehow, as it actually matured and became a part of our life, the notion switched to like, it's going to replace human work. But the original thesis was not necessarily to replace humans. It was to free up humans to do more interesting, complicated things. And yet we've lost that as it's like become a real thing in our businesses. And I'm not sure why that happened.
Well, because that's happened with almost every single technological innovation since we started writing words down on paper. I mean, there were philosophers back in the day that thought if we started writing things down on paper, that would diminish our ability to have human interaction and conversation with one another. That wasn't email. That was literally a pen and paper, or, you know, some sort of what's the word I'm looking for? You know, a parchment, right? A parchment. Yeah. Somebody, you know, was probably writing in like cow's blood or something, and like that freaked the world out, right?
Yeah.
You know, but if you look at what technology has done, I mean, I'm sitting right now in my kitchen. If I unblurred my background, you would see all kinds of machines back here that 150 years ago I wouldn't have had. And making breakfast in the morning would have taken 4.5 hours instead of 6 minutes, right? Yes. And at some point, somebody was scared that if we put a dishwasher in the kitchen, that would, you know, that would interrupt our lives in some way, right? Yeah. And if you think about how freaked out people get when they show images of people on a subway buried in their phones, right? And then you take that and you extrapolate it back to pictures of the New York City subway from the 30s and 40s, and everybody's sitting there with a newspaper open in front of them, right? Yeah. We freak out about any technology implementation that comes about simply because we're afraid of change as human beings, right? When I first got in this business in the late 90s, all I heard about from the day I started was Y2K, oh my God, it's coming, the whole world is going to end, right?
Sure. Yep.
And literally nothing happened. Nothing, like zero. Yeah. Not one single disturbance or delayed email. But we love to freak out about change because we know it's scary. We know it gets people excited. And as soon as we have any kind of implementation that we get excited about, we almost immediately turn as a society to like, all right, what's the scary part of this? Like, how is this going to now like pull off my job entirely and like move me out into the streets? You know, and I see the media continue to do that. I'm sorry for this rant. It'll be over soon. And I see the media do that when they talk about how many people are losing their jobs now because of AI in different companies. But think about how many new roles can be created from AI and how much further we can take the reaches of our economy because we can do so many other things. Doesn't that present more opportunity for people and not less? I think so.
You know what's interesting about that, Kobe? I had a conversation last night that sort of relates to this, which is like the thing we should have been afraid of, which was Facebook and Instagram, we weren't afraid of, and it became the more dangerous tool. AI is the more productive tool, and we're afraid of it. The thing we weren't afraid of has been totally detrimental to our conversation and our interactions as people. So like, it's kind of funny how we are so good at getting these things wrong.
Oh, we're great. We get it all wrong,
Yeah.
but that's what makes like this whole human journey so interesting, is that we have these preconceived notions that are almost in our DNA. I've heard, I don't know why, it's one of those things where you start to think about something and then you see it all the time. Like if you think about a red car. So at some point in the last year, someone talked about how crows have like this generational trauma where like if you piss off a crow today, its grandchildren will remember that you somehow pissed off that crow and like it'll get back at you. Like we have those same things in us where like anything that comes about that represents a change or advancement, I mean, it's one thing after another, and then all of a sudden it becomes normalized, right? And there's books written about how that happens, but once it becomes normalized, we move on and we find the next thing to get all freaked out about, every single time. And so LO's worrying about, am I going to lose my job to AI? I mean, I don't know about you guys, but I've heard many of the AI phone calls to people, and they're going to get better. But at the same time, you're talking to a robot, right? And that robot does not have a family, and that robot did not have the same experience you did of, getting a job, buying a house, etc. And I think at the end of the day, it's never going to replace that human connection. I think the St. Louis Fed did a study about what kind of jobs are actually threatened by AI. And like the least affected were that of salespeople, because people want that connection. And salespeople, especially in the thing we do, which is buying and selling a home, financing that home, that's a thing people don't do every day. They want that guidance. They crave that leadership. So, that's a conversation we could have for hours. The other thing that I was, really impacted by this week, disappointed. I thought it was something interesting. People were talking about it a lot on LinkedIn. They were talking about it a lot at the conference was, what happened between Barry Habib and Bill Pulte, like what went on there, behind those closed doors, like the interview with Housing Wire, Pulte tweeting minutes later about, how, hey, thanks for the info, Barry, but we're going to start talking to other people. The this was nice, but I think we should see other people tweet. And, that kind of had an impact in terms of like, all right, where are we really going with the FHFA? What are their real intentions? I think the cat's out of the bag of who Pulte is really pulling for at this point, and that's his boss. But, how do we as a housing industry respond to that? And I thought that was a pretty interesting thing. I've been thinking a lot about that this week. I don't know if you guys have, have had your thoughts on it.
Yeah, I mean, I definitely thought it came up. It feels to me like one of the hot topics of the week for sure. And it just felt like, I don't know, but Barry getting comfortable in his role and being able to say, here's what I would like to see happen. And then Pulte asserting authority and saying, I'm glad you're comfortable in your role now and getting settled in, but, we'll decide what we're going to do. So to me, that was really the story. What I was a little bit more curious about was why, when we start talking about LLPAs, cross-subsidization was a huge conversation, especially as the previous administration looked to encourage first-time home ownership, first-time home buyers. And I think it kind of bears just talking about, which is like, I think the LLPAs we were all discussing this week were only refis and second homes or refis and vacation homes anyway. This wasn't even really, I mean, could that drive a little bit more volume as we saw rates drop in like mortgage pipelines? A little, but it wasn't really going to move the needle for the industry. And it became this whole thing. What would move the industry forward would be primary first-time home buyer, primary occupied first-time home buyer LLPAs adjusting to conform to what we know about older first-time home buyers and more wealthy first-time home buyers. Yeah, we're still not having that conversation. So
100%. Yeah, I don't think anyone's too worked up about like, oh my God, my second home is going to be $60 more per month. I don't know what I'm going to do, and let the pearl clutching commence. And I think that's kind of where we have a severe affordability crisis going on in this country. NAR's latest stats show that the number I've been throwing out, 38 years old for the average age of the first-time home buyer, that's now gone up to 40, which, and it was as low as 29 in 1981. I mean, so basically, in 1981, you went to college, you got your first job that didn't pay much, you got your second job that paid a little more, and now you put away some money and you bought a house. The American dream realized, right? And we're so far from that right now, where if you're the average 40-year-old, and that's the average number, right? That means that there are a bunch of people that are much older than that have not bought their first home. And so we really need to look and say, okay, where do we stand as an industry in terms of what our responsibility is in solving this problem? Mm-hmm. And one of the things that obviously impacts affordability is housing inventory. And if we look at all the reasons housing inventory is stifled, well, we have the Great Recession in 2009, where it became, we lost all these builders. But we also started to see over the last, 30, 40 years, we started to see from a local perspective, and in neighborhoods that were affluent or just middle class, where they started to put zoning laws and permit laws and coding laws in there that made it really hard to build housing for anything other than a single family home on an acre of land or whatever the local ordinance was. And this not in my backyard movement that started 40 years ago, that there's some legs to the yes in my backyard. But I really feel like, where are we as a mortgage industry and a housing industry? Like, we should be on the forefront of that effort. Like, we should be the ones sending delegates into those, local zoning commissions and having real reach in there. And that should be something that the MBA is maybe coordinating, but doesn't necessarily need to. And I just think that if we're not looking at the root causes of the affordability crisis, but instead we're looking at, how do we cure some of its symptoms, then we're not having the full conversation that needs to be had around it.
Yeah, I agree. I really like the conversations I've heard around Fannie and Freddie unlocking the financing further upstream for developers, construction partnerships, builder partnerships. And I think that's going to be really useful in the next couple of years to talk through. We have a ton of data right now on who these first-time home buyers are. We're pre-approving people earlier and earlier, and or they're shopping longer and longer, which means we have these data feeds running and we're seeing what it looks like to be a qualified first-time home buyer. I don't have the data on this yet, but my gut is telling me we have the most qualified pre-approval pool we've ever had in terms of credit risk and credit quality right now. And there's a bunch of people nervous about households being able to make their payments, right? Loan modifications, requests for loan modifications are increasing. So I'm not saying it isn't without risk in a high debt, high consumer debt economy. But what I'm saying is people waited longer, they have more liquid assets, and they've been making a higher rent payment for longer, such that we should be able to look at that and say, financing them a home, building it for them, building a community where they're all pre-sold seems very reasonable for Fannie and Freddie to want to be involved in, and for our industry to want to fuel. And I just haven't seen enough of it, but we're starting to get inklings of it. So I think you're exactly right. There's still a lot that our industry could be doing with Fannie and Freddie to like really address the combination of supply and demand and where it meets.
Part of the problem is we just don't have an FHFA director that's taking his job seriously. And seems a little more interested in pleasing his boss and kind of positioning the GSEs for privatization and coming out of the conservatorship, as opposed to looking for real solutions. And to me, that's a big disappointment. We all thought somebody from the housing industry going into that role would kind of champion some of these causes, bringing Barry onto the board, champion some of these causes. We've just not seen it yet. And there's too much of our industry and the housing supply market in general that is a little bit handcuffed by the GSEs. And don't get me wrong, the GSEs are great. They're the cornerstone of our mortgage market that would make all of it possible, right? The 30-year fix does not exist without the GSEs. But I think there's also solutions to be had, both at the government level, but also on the grassroots level. If you think about, where I live in California, as Rick was very adamant that I own, we have something called Prop 13. And Prop 13 keeps taxes super low on properties. But we also have the other end of that stick, which is we have super high state income tax. And Mike Simonson from Altos, he's now the chief economist with Compass, but he's the one that pointed this out to me a while back, in that if you look at Texas has super high property taxes, very zero income tax on the state level, right? In states where you have that, where you have higher property taxes and lower state income tax versus California, which is the flip, you have a much more vibrant real estate market, right? People are incentivized to move. They're incentivized to sell their homes. There's more inventory. There's more of a fluid market. California, you have people sitting on $5-6 million properties who are, paying $2,500 a year in taxes. What's that person's incentive if they're aging in place or want to age in place? What's that person's incentive to downgrade or to downsize because they've got a big, lawn to mow maybe. But if you're only paying that much in annual taxes, you can afford to pay someone to do it. So we've got some of our rules in place on a state level, on a local level that are inhibiting the market that, that's part of the reason that you've got super qualified people that are 40 years old now that can buy a home because they've not found the right opportunity and it's just not been a viable option for them. There's a lot of things that we could be doing to address the problem that we can completely avoid having to deal with any government agency on. And I think we need to be talking about that a lot more.
Yeah. I was thinking about this in the sense of like Pulte, one thing that they did do was move this concept of the Great American Mortgage Corporation like out front, right? So not doing any of the things we just talked about that would actually move the needle for the industry. But I think it's interesting to kind of lead with Fannie and Freddie. Like, I know that was like a big conversation when they went into conservatorship, that all of a sudden the general public understood more about these organizations than they had ever understood before. But really, like to your point, the advocacy in the mortgage industry should be about mortgage companies. Like not like you and I and others, we talk about like what tools we want Fannie and Freddie putting in the market. Like we just had that conversation, but like we got to do a better job advocating for the role of financing in the process. And I just feel like we don't do it. And I feel like in the last few years, we've given a lot of ground over to real estate agents that could be shared. It could be shared responsibility for how we advocate together, how these things come together. We're still, and I am leading up to a question, I promise, but we're still acting like three separate industries. And I know T360, you guys have visibility now into multiple things, real estate, mortgage, title. But it still feels to me, and I've been pounding the table for 2 years, it still feels to me like we're three separate groups with three separate events with separate advocacy and separate things. And that's not how the general public, that's not how any first-time homebuyer I talk to, it's not how my friends view the thing. They view it as one thing. I want to buy a house. It has components, but they don't think of it as like, oh, I have a real estate agent, and then I want to go over here and do this, and then I want to go over. They don't want to go anywhere else.
Yeah, and then they get in the process and they're worried. They wonder why it's not working.
Yeah, so tell me exactly, like, how do we overcome this, like, we're three separate groups problem that continues to plague us?
Yeah, I think you're seeing some of it, right? I think in the last year, especially more so than the past 40 years, right? You've seen the industries get together. You've seen this integration happen. You've seen Rocket buy a big real estate company, just mainly for their eyeballs, but still trying to get in earlier in that funnel. You've seen them acquire Mr. Cooper. Just in the past month or so, we saw Carrington, that mortgage, that big IMB that owns a big real estate brokerage. Now they've bought a direct-to-consumer mortgage company that has a big servicing portfolio, trying to capture that entire funnel. So I think you're seeing some of that. And I think that's how. So to answer your question, that's how. You're seeing how. It's by companies coming together and realizing, hey, our margins are thin here on the mortgage side. Our margins are razor thin here on the real estate side. We can't generate enough volume. It just isn't there to volume our way out of the problem. We've got to figure out how to create vertical integrations that actually produce revenue from the same leads. By the way, if you do it correctly, that also helps your retention on the backside of keeping that customer, because we know 80% of customers walk away from both real estate and mortgage and never come back, which in turn reduces your customer acquisition cost, which makes you more profitable. So I think the cat's out of the bag. A lot of that has to do with the technology that we've got now that we didn't have then. The fact that we've got some lighter regulation in place. We'll see how the pendulum swings there. And then, the biggest reason, in my view, necessity being the mother of all invention. Everybody's saying, all right, we're now in year 3, almost year 4 of compressed margins, compressed transactions, compress. How do we actually sit down and think about how to generate revenue? Oh, wait, I know. We all have the same customer. Let's get together and service them properly, and we can create a better customer journey and make some money.
Yeah. Okay. That kind of leads me to the question, though. It sounds like there's going to be consolidation in mortgage that is already happening and follows, even to a greater extent, the consolidation we're seeing in real estate. And so you've got some consolidation, like you said, around these digital platforms on the Rocket side, and then the servicer. And there's another example, Lakeview, Bayview, and Guild, right?
Yep.
So now they have an origination relationship under one roof. And we're seeing, Compass and Anywhere on that side, and Zillow Home Loans is continuing to try to make that a piece of it. So do you think it's a larger threat to the medium-sized mortgage company than, let's say we talked about at MBA Annual? Like, I feel like what we talked about was a lot of like the pricing of credit reports. We talked about voice AI. We talked about AI underwriting. But like maybe what we should have been talking about, or maybe what you're saying is this is a trend that is going to have pretty medium-term impact on this industry because it's going to be demanded by the market.
Yeah, I don't think that the future of our industries, of our housing services ecosystem, I don't think it's threatened by consolidation. I think it creates opportunities for companies or mid-size that are doing it right. Because you don't have to go out and buy a servicer or buy a portal that has 50 million eyeballs. You can set up a JV. You can set up an MSA. You can create your own real estate brokerage underneath your entity. You can go franchise with a title company. You can do a lot of things to create this singular customer journey on a regional level, on a large MSA level, metro statistical area, not marketing services agreement. You can create these little fiefdoms for yourself and actually have the same kind of outcome in terms of profit margin realization. So I think there's a lot of opportunity there. You have the opportunity, if you're a small, medium-sized IMB, to maybe consolidate with another smaller, medium-sized IMB and create a super regional bank. I think that if we figure out how to get right the housing services ecosystem, we figure out how to create that really good customer journey, a lot of people will figure out how to mimic it and make money on it. And then you'll see all kinds of different iterations of it. So I don't think consolidation is a threat in general. I think consolidation is an opportunity. And if you just look at the airlines, right, we talked about this when we saw the Compass acquisition of Anywhere. We talked about, is real estate moving where the airlines move, where you've got American, Delta, United, and Southwest, right? And you've got these four major airlines. And that's what real estate is going to look like if you've got four major brands. Well, if you think about it, there's a lot of opportunity in the airline business for regional carriers, for a disruptor like JetBlue when they came in to do what they did, right? I think if you improve the overall customer experience, that has positive effects downstream if you're doing business the right way. So I think it's a great opportunity if on the flip side of that, right? If I were to tell you, hey, nothing is going to change in the next 5 years in how we do business and what the customer journey is going to look like. We're going to do everything exactly like we've been doing it the last 30, 40 years.
Yep.
I would think that would sound like a much bigger threat to us than that.
Yeah, I would agree. That's a really good point, that we like to think of things the way they are, not the way they could be after the change. We're like thinking of our channels, for instance, wholesale, consumer direct, retail, correspondent, as if they'll exist in the same way. They'll be somewhere in some form, and it may just take a different form, or they may merge, or there may be some other way. And I think that's the right way to think about it, to be clear. But I also think we too heavily focus on those channels will always be there, and so they need to be all. It's like, no, they might be there in a different form, or they might merge, but it isn't going to mean that our companies are gone or our flags are gone. I like to think about it. The example you use is airlines. I'll just throw one out there too that I always use, which is the Bonvoy family of hotels.
Yeah, don't get me started on those. But go ahead.
Well, I'm not going to endorse one hotel rewards program versus another, but what you can see is 2 or 3 of them right on the same block competing for your business, even though they're all under the same flagship. So you could imagine our industry, which is also consumer facing, which also has kind of these building relationships in an ecosystem trends to it, could also take that shape. I'm under this flag, but I kind of fly my own brand in some way. My hotel's a little bit more trendy, or more hipster. My hotel's a little for longer stays or something, even though it's all under the same thing. So I think that's a really good way to say, the industry's going to evolve, but it doesn't mean those flags are going away, even though.
Well, don't we already have that? But don't we already have that? I mean, you have
the beginning of it.
Yeah, but you have larger banks that for a long time now have had a retail, have had a DTC, they've had a correspondent channel, they've had a wholesale channel, right? We've seen that, right? And some banks have gone away from, they've focused on one area or the other, but that's not new where you have different customer experience within the same brand, right? You could be a broker sending loans to US Bank, or you could be wearing a US Bank polo shirt in a branch. Like those are both ways to do business with US Bank, right?
That's right.
And I think that we might see more iterations of it, but you're absolutely right in terms of, we had this conversation at the beginning of the hour, right, about AI, right? Like it something that represents change also brings with it fear and uncertainty. We're seeing the brokers creep up on, what is it, 25, almost 30% now market share. Mm-hmm. Do you know that in Canada, the mortgage brokers have 50% market share and no one is bothered by that?
Yeah,
it's just how it is. And it's like, great, that's another channel. This is another channel. And this is how we do it. We see brokers with 25% market share, and we stand up on our chairs in the kitchen like a mouse ran by. So, we need to get used to the fact that, like, the UWMs in the world and the Rockets of the world on the broker side that are producing such amazing technical innovations, that's what's driving that market share. And if you're not paying attention to that on the retail side to say, hey, they're actually putting a focus. UWM's got an 1,800 person IT department. If you're not looking at that on the retail channel and saying, wow, they're really creating an amazing workflow process and customer journey by extension. And if we're not providing that, we're going to lose. If you're not taking that seriously, you're going to be wondering what happened when your market share shrinks, infinitely, and UWMs and Rockets goes up.
Yeah. The focus and that ability to focus on fulfillment, a fulfillment platform that different loan origination sources can plug into of different varying sizes, right? UWM has the one-person broker shop and the 3,300 LO broker shop, and they have and everything in between. And because they've created a platform you can plug into, similar to the channel strategy at Rocket. I guess that's the good place to end our conversation, which is bringing it full circle. That was kind of the thing that caught my attention. James Kleiman from the Mortgage Scoop posted a couple days ago, 2 days ago, that UWM had a $4.8 billion lock day. And I remember big lock days at Rocket when I was there at Quicken. $4.8 billion lock day is a pretty significant day.
Yeah, I think you go out for a couple of beers at the end of that day. I think you go out for a couple of beers at the end of that day.
Yeah.
You know what struck me about that day? And sorry, I didn't mean to deter you.
Please. No,
what struck me about that day was, and I read James's column, and I love James, he's a good friend, and I wish him all the success with the Scoop. I read it, as soon as it comes out. Yeah. 400,000 AI calls that generated 14,000 closed loans, which represents, if I'm not mistaken, a 3.5% conversion rate, which is great, right? Yeah. But 400,000 calls, right? That is carpet bombing your entire customer base. And at what point does that have some kind of negative repercussion? We just went through a trigger bill reform where people were so sick of getting, their phones blown up by mortgage companies, but we had to carve out for the servicer, and you can certainly call your own customers. But at what point does that backfire on you when you've nuked 400,000 of your customers? Because it wasn't it wasn't 400,000 separate customers getting one phone call, right? So, that's something that I'm interested in watching to see what the progression of that looks like. But it was something that I took from James's article that really has stuck with me and I'm thinking about.
Totally. I appreciate that comment because I think you're exactly right. I'm usually too idealistic on these like product development things. So hear me acknowledge that. Yeah. And also say that I don't understand why we decided or somebody decided that we need to fake humanity in these phone calls. If it was me and I could either turn back the clock or make a decision right now going forward, I would do two things. One, I would just ask the customer when they want to be called. Like, we should be able to set a range. You should call me if you can save me $100 or more is a pretty nice engagement question for UWM or Rocket or any servicer to be asking, because A, it gets them involved in the collaboration of their next mortgage really early on, right? So you closed 3 months ago, you closed 6 months ago. I'm going to reach out to you and say, we're starting to see savings. When would you like us to call you? That way, if you do call 13 times in a day, it actually at least is tied to something you've already asked.
Yeah.
You told me to call you when you could save more than 100, more than 200, more than $300. Second, I don't understand why we don't just say, I'm a virtual assistant calling on behalf of Kobe. If you don't want to talk to me, press 2. If you want me to help you, here's all the benefits I offer you right now. We can get you started quickly. We can save you 10 basis points processing fee. And then you're working with, I think all that like FCC regulation and robocalling concern goes away when you just say, I'm Kobe's virtual assistant. The benefits of working with me are A, B, and C. Do you want to stay on the phone and get this done for a 10 basis point credit? Or do you want to press 2 and be shoved into some other communication channel? Are these unreasonable asks of me as
you've just so unbelievably articulated everything I've been feeling, because I've sat through in the last year demo after demo after demo of the virtual AI phone calls. And the value prop of everyone is what? It sounds just like a human. And they all, at every single presentation, they make sure to tell us that somebody or some bodies have asked the virtual AI out on a date, right? As if to like underscore the point of like, we are fooling people so well that they are flirting with machines. And I think you're so right that like we are marching down the wrong path if that's our aim.
Yeah. Because I mean, I think also generally people have an inkling that they're talking to or might be talking to an AI. What's going to happen soon is that they're just going to default to assuming it's an AI, even when it's not, if we continue down this path. So you're not going to get the benefit out of it anyway. So if you're rolling out voice AI because it's a benefit to you as the company and you cannot articulate any benefit it has to your customer, I think you're going to find it doesn't pay off in the end. That there isn't actually.
I'm with you, man. I'm with you. We need to make AI part of the process, not the tip of the spear.
But if you can actually make it a benefit to the customer, you should absolutely engage it. Anything that you can articulate as a benefit to your customer is when you should adopt it. So you and I agree on that as well. So it's going to be one of those hot topics, but I think we're already starting to see it change.
Yeah, be good to have another podcast about this in 6 months. See where we're at.
Let's do it. I think we'll be talking a lot before then, but at a minimum, that's when we'll talk next. But Kobe, thank you for being here. It's great to talk to you. I'm glad we got a chance to talk.
Yeah, it's the first time I've seen you since we got to meet in person in Dallas a few months ago. So
yeah, I was gonna say, I was just trying to think of when the next time we'll see each other or be in the same spot. It kind of slows down now a little bit until the new year. But it's great to have you here. Thanks for the thoughtful conversation. We'll keep reading you on LinkedIn and connecting, and reach out if I can do anything to help.
Appreciate it. Thank you, Jeremy.
All right, man. Take care. Yeah. Bye.
I don't know if I need to stay on. Nope, I guess not.